Good Thursday morning, Top Gun options traders and investors. Whiz here with your market SITREP. And bizarro market continues, folks. Unless you were in a cave yesterday, you saw that the market just pressed higher to unprecedented historic levels, right? Just keep buying. Everybody just keep buying. The party's going to go on forever, right? Of course, we don't know that's right, folks. The underlying fundamentals of this market are hollow. They're built on cards. Right? There is one man, Atlas, named Bernanke, who is holding this market up with $85 billion a month in liquidity. It's a fake market, folks. That's why I call it bizarro market. Bad news is good news, right? The bad news on the jobs report, which is bad for the economy and bad for America, is great news for the stock market because that means the Bernanke is going to keep pumping money into this market, right? It's the wealth effect. And it's going to destroy us. Sam Zell, 5,000-pound head, yesterday on Comedy Central. The stock market feels like the housing market of 2006. Yeah. Everybody's saying this can't end, right? And just about the time you decide to get in and go, hey, wow, this is awesome. You do a backflip off the high dive, and Wall Street gets out of the pool, and it's empty, and you're going to break your neck. I guarantee you that's what's going to happen. This is going to end, folks, just like Colonel Kilgore said in Apocalypse Now after the napalm strike. You know, someday this is all going to end, even though it doesn't feel like it. This morning, folks, we had weekly jobless claims come out, right? Down 42,000, 346,000, right? So in bizarro market, good news is bad news and bad news is good news. So the market took the horrendous jobs report on Friday as good news, right? Again, the economy and the market completely disconnected. They're in two separate universes, right? The stock market is not reflecting what's going on in the economy. If bizarro world didn't exist, if the Fed wasn't doing what they're doing, with that jobs report on Friday, the market would have crashed about 600 points. It didn't. It went up because the drunks in the market know that Mr. Bernanke is going to keep pumping liquidity into this market. So technically, this good jobs number, it's a semi-good jobs number. I mean, it came in lighter than expected. Is it good news or bad news, right? It's funny talking to all the heavies and folks that I talk to throughout the day because everybody's looking at each other going, well, wait a minute. Is that good news, or is that bad news, or bad news, bad news? It really is almost comical, folks. It isn't that comical because, as I said, this is going to end. And when is it going to end? Well, the Fed's trying to prep the battlefield, right? The premature release of the minutes to people on Wall Street and banks and hedge funds, not you, of course. It said more or less that there's half the folks are getting creeped out about what they're doing, and they want to end this asset purchases maybe middle of this year or September. And some folks, of course, want to just keep getting drunk and keep inflating this bubble even higher until the cows come home. So there is an active debate within the Fed to when this stuff is going to end. But it's going to end, folks. It has to. We can't keep doing this, right? And NBC Wall Street Journal poll, sequester cuts are going to hurt the economy. We haven't even seen, so the horrendous jobs numbers were a result of a couple factors, but mainly the Obama tax increases, right? And small businesses getting shellacked again by this president and this administration. Now the sequester is going to start coming into the economy here. So does bad news with the sequester equal Fed staying around more and propping up the market? And if it does, we just keep going higher, folks, right? And hold your nose. And let me talk about the hold your nose trade. Here's how I know that nobody really believes this market. Here's a chart of the VIX versus the S&P yesterday. So look at the nice climb out of the S&P, but look at the VIX. S&P up, VIX up. That is very interesting. So as the market was going up yesterday, traders or institutional investors, everybody was scrambling for protection. Nobody's really believing this. Everybody knows that the music's going to stop. It's just a matter of when, right? And then obviously, let's take a look at gold. So the VIX yesterday really, it actually rallied a little bit off its lows, only being down, I think at its lowest was down about 2.5% and cut most of those losses. With 140 or whatever ridiculous rally we had yesterday out of the Dow, not seeing the VIX down 10-15% tells me something. This also tells me something as well. Look at the GLD yesterday. Yeah, it sold off, but it didn't really sell off, okay? It didn't break that. We broke the 150 level, which is secondary support. We broke that last week, but we didn't break that yesterday, which it didn't surprise me as well. Seeing the VIX action and seeing the GLD action, nobody's believing this rally, yet they're participating in it. So be very, very careful, folks. I'm telling you to be very careful. If you're new to the market, now is not the time to get in. It could go higher, but I'm going to tell you right now, nobody rings a bell at the top of the market, and nobody rings a bell at the bottom of the market, okay? So unless you're Nostradamus and you know when this market's going to roll over, I'd be very careful with putting new money to work here. Looking at the put-call ratio yesterday as well, it's just a absolute tremendous amount of put buying yesterday. So yeah, people were bullish yesterday, but as we saw with the VIX, we saw with gold, and I'm seeing with the options activity, a lot of put buying. So people are hedging their bets. So if you are going to jump into this pool and you think it's warm, make sure you got your floaties on. And if you don't have your floaties on, we're going to talk about that tomorrow in 2 live trading sessions, one at 1 and one at 4:30 after the market closes, where we're going to talk about weekly options, because trading weekly options recently has been just absolutely incredible. It's like cats. I laughed, I cried. I'd see it again and again. I mean, just incredible up weeks, incredible down weeks, just massive volatility trading weekly options, because things can happen in an hour. A day is a lifetime in weekly options. So based on the market action that's going on today, it's going to be completely different tomorrow, because tomorrow morning we have retail sales coming out and University of Michigan consumer sentiment, which could potentially be market moving information. And that comes out before the market opens tomorrow. But again, if we have bad retail sales numbers, does the market go down or does it go up? Right? If we have bad retail sales numbers and the economy's not doing good, that's going to tell traders that the Bernac's going to hang out a little bit more and the market could potentially go up. Or does the market decide tomorrow that, you know what, bad retail numbers is bad retail numbers and the market goes down? Well, stay tuned. And I'm going to help you sort this all out tomorrow afternoon. Make sure you click on the link in this email to register for our live trading session tomorrow. And we'll talk about all this stuff and more tomorrow afternoon to help you make sense of what's going on in bizarro market. Okay, got to run, got to trade. Happy hunting. Make sure you hedge, and I'll talk to you guys with Friday's market wrap up tomorrow, or I'll see you in one of our 2 live trading sessions tomorrow afternoon. See ya.